Hi, I'm Robert Reich, and I want to talk to you today about the global corporation and what's happening to nations. A Senate report criticizes Apple for shifting billions of dollars in profits into Irish affiliates where its tax rate is less than 2%, and yet a growing chorus of politicians call for lower corporate taxes in order to make the United States more competitive. Now, the seeming contradiction is explained by the simple fact that global capital is gaining enormous bargaining power over nation states. Global companies, they aren't interested in raising living standards or making America or any other nation more competitive. Their only goal is to maximize returns to their investors. An Apple executive recently put it bluntly. He said, "We don't have an obligation to solve America's problems. Our only obligation is making the best possible product." And he might have added, in order to make as much money as possible. Such single-mindedness is aided and abetted by a new wave of advanced software applications combined with enormous computing power, all available on the internet in such a way as to enable companies to shift resources almost anywhere on Earth at the speed of an electronic impulse. What this means, again, is that the bargaining power of nations continues to decline. Not only does money move immediately to wherever it can summon the highest return and be subject to the least tax, but jobs can be dispatched almost as quickly to wherever workers get the lowest wages for the most output. This makes nations ever more dependent on global capital, as bricks and mortar investments in plant and equipment, requiring commitment to a particular geographic location, are increasingly replaced by intellectual capital and portfolio investments that are essentially rootless. They can go anywhere and do go anywhere anytime. National dependence on global capital has increased as workers are displaced from assembly line and routine service jobs like bank tellers, telephone operators, gas station attendants. Skill jobs are replicated by software, brokers, accountants, insurance claims, adjusters, and so on. And even higher level professionals are threatened. I mean, how long is it going to be before doctors are replaced by diagnostic software and professors by online lecturers? All this, in turn, is putting greater and greater pressure on politicians to attract global capital, creating a very fierce race to the bottom. The result is that effective tax rates on global companies are declining almost everywhere around the world. Regulations are being dismantled. Not even the worst financial disaster since the 1930s has produced much by way of new financial rules. Government subsidies to corporations are growing, and real wages are dropping. In the United States and other rich nations, the percentage of gross domestic product, that is, the percentage of the economy going to wages, continues to drop, while the percentage going to profits steadily increases. Almost all the economic gains in the United States since the Great Recession have gone to the wealthiest 1%, who own the lion's share of financial assets, while the bottom 90% has become steadily poorer. Individual states inside the United States have embarked on their own races to the bottom, seeking to lure investments and jobs, often from neighboring states, with lower taxes, higher subsidies, reduced regulation, and lower real wages. Again, they also are bargaining with global capital. But these trends are not inevitable. A way for nations, as well as individual states, to regain some bargaining leverage over global capital would be to stop racing against each other and join together to set terms for access to their markets. After all, global capital depends on consumers, and access to large consumer markets, such as the United States and the European Union, is essential if global capital is going to earn a healthy return. For example, why should Apple have access to U.S. consumers if Apple refuses to pay its fair share of taxes to finance the infrastructure and education that Americans need in order to improve their living standards? Americans could buy from one of Apple's competitors instead. Likewise, it makes no sense for states or provinces within any nation to compete against each other for jobs and investment. These kinds of races only further strengthen the hand of global capital, and they reduce the bargaining power of the nation. And these contests don't produce net new jobs or investment. They only move jobs and investments from one locale to another, and they should be prohibited by federal law. Similarly, the European Union could be a bargaining agent for its citizens if it were to condition access to its hugely valuable market on paying taxes in proportion to a global corporation's earnings in the European Union, as well as making investments, including research and development, in similar proportion. Now, it's true, any move toward enhancing the power of nations or groups of nations relative to global capital and global corporations is surely going to provoke fierce resistance. But this doesn't make the goal less important. It just makes it more difficult to achieve. Thanks.